So from all the VTSAX videos that I've done, I've realized one thing from the comments. VTSAX isn't really for everyone. And oftentimes I end up recommending VTI instead of VTSAX for those people that really can't get into VTSAX. So in this video, I kind of want to show that comparison and how they're pretty much the same, but there are some differences, and whether VTI might be a better option for you than VTSAX. And if you're new to the channel and you've never seen any of those videos about VTSAX, I'll leave a playlist in the end card, down in the description, and the comments below, so you could check out everything that you need to know, a beginner's guide, how to buy it, Vanguard in general, everything that you might want, I'll leave at the end of this video. Now we know first and foremost that index funds are the greatest way to get the maximum diversification for the lowest amount of cost. And when it comes to VTSAX and VTI, you really only need one of the two in your portfolio depending on your situation. Both of them are indexes that track the total stock market. Essentially, whatever the stock market's doing, it does as well. So when the stock market's up, it trends to go up. And when the stock market dips like last week, it also dips as well. First, let's talk about their similarities. VTI and VTSAX have similar or identical expense ratios, meaning how much money you have to pay for Vanguard to manage those funds. And that expense ratio can change, and that's why I say it's going to be similar or different. But right now, it's at 0.04%, meaning this: for every $10,000 you invest and have invested, you have to pay Vanguard $4 per year. That's right, $4 on $10,000. So that's what I'm talking about when I say their expenses are low. And for Vanguard, if you're inside the brokerage of Vanguard, those are the only fees that you're gonna pay if you go paperless. If you wanna get your stuff in the mail, like your statements and things like that, they charge you $20 a year. But get them emailed to you and do everything through e-sign, they waive all the fees. So essentially, when you're involved with VTI or VTSAX, the only fee that you're gonna pay as of right now is $4 a year for every $10,000 invested. The other major similarity, which is kind of the most important thing to us, is that they are identical investment vehicles, meaning they have the exact same stocks in them. Right now, a little over 3,500 stocks are inside those index funds. They generate the same exact identical return every single year and also have the same dividend yield. And because of this identical investment, that's why I say you only need one of the two. By having a VTI and VTSAX, you essentially have the exact same investment. Okay, so if they're identical in investments and annual returns and dividends, then why have two of them? Well, what are the differences? So let's now look at the differences, which may lead you to a decision of whether VTSAX is for you or VTI. One of the major differences is the cost of VTI versus VTSAX, and also the minimum amount of money that you need to invest in those funds. Currently, as of today, you need $3,000 to invest in VTSAX. Now, that doesn't mean that VTSAX is $3,000 per share. Actually, it's in about the mid-70s right now. But what it does mean is to initiate your investment in VTSAX, you need to have a lump sum of $3,000. Now, not every investment needs to be $3,000. After that, you can buy them with whatever amount of money that you want, but you do need that $3,000 first to initiate the fund. And that right there is a major turnoff for a lot of people. $3,000 is a lot of money, and some people don't have that to initially invest. So one of the options that you might want to go with is VTI. Now, because VTI is an exchange traded fund, it trades openly on the stock market. So the minimum amount to invest in VTI is the price for one share. That's it. As long as you can buy one share of it, that's all the money that you're going to need. And you could do this on pretty much any brokerage account out there. Right now, the price of one share is $150-ish. As you know, things are going up and down, but for about $150, you can get involved in a total stock market index fund. You just have to do it with VTI, not VTSAX. Now, one of the other major differences is because VTI trades on the open stock market, we look at something we call real-time pricing, meaning VTI's price is going to fluctuate throughout the day depending on the market. When the market opens in the morning, it might be one price and it's going to go up and down and be a little bit volatile throughout the day. And when you purchase it, you are going to get it for the price at that moment. But VTSAX isn't like that. You buy VTSAX at any time and the price is set for VTSAX at the end of that trading day. So like for example, the other day when the market dipped and I bought a bunch of VTSAX, I bought it at 9 o'clock in the morning. But the price that I bought it at was established at 4 o'clock when the markets closed. Now, is the volatility of that entire day an issue for me? No, not really. And if you're a long-term investor, like you should be when you're getting into index funds, these hour-to-hour differences really don't matter because over the course of 10, 20, 30 years, what happens in an 8 to 10 hour window is not that big of a deal. So the last difference is automatic withdrawals and investments. Right now on Vanguard, you can only set up automatic investments and withdrawals using VTSAX. That's a major thing for me because I love automation and I love the fact that every single Friday, money automatically comes out of my checking account and gets invested into VTSAX. With VTI, you can't do that and you're going to have to do it manually over time. Now, for most people, it's like, okay, no big deal. I'll just do it manually. But you miss 1 week, then you miss 2 weeks, and then you miss a month. So for me, I love automation. So that's a big selling point for me of why I choose VTSAX over VTI. So now you can kind of see why when you ask me which one you should do, I really don't know. It's up to you. If you're using brokerage accounts like Robinhood or Webull or M1 Finance, then you want to get that exchange traded fund, VTI. If you only have $150 or you only have $500, then you might want to go with VTI. If you have the $3,000 and you love automation and you love no fees, then maybe you want to go the route of VTSAX. Guys, at the end of the day, don't overanalyze the situation. At the end of the day, you're investing and it's a good thing and they're pretty much identical. It does not matter. $200 in VTI is the same as $200 in VTSAX. I know that once VTI dropped its expense ratio down to 0.03 and everyone's like, forget about VTSAX, guys. That's $1 on $10,000, so don't worry too much about it. And I've also heard people talk about it, and I've even talked about it as well, taking your VTI shares when they get to $3,000 and making them into VTSAX. I just want to clarify, when you do that, it doesn't automatically convert from VTI to VTSAX. You are pretty much going to raise up your VTIs to $3,000. You'll have to sell them off, pay any capital gains tax, and then go into VTSAX if you really wanted to. But if you don't need the automation and things like that, then I wouldn't worry too much about it. Just keep growing VTI. If you have any other questions, guys, just leave them in the comments below. I'll get to them, I promise, and I'll answer them to the best of my ability. Here's that Vanguard playlist I was talking about before, and here's a look at my $100,000 investment portfolio. Until I see you on the next one, guys, stay positive, work really, really hard, always be kind to other people. I hope you have yourself an amazing day and an even better tomorrow.